if you're not an optimist, you don't do entrepreneurship anymore.
Hi, it's Ronit, and with my partner in crime, Gaurav, we're delighted to host our guest for today. Alper, greeting.
Hi, Rohit, and hi, Gaurav. How are you?
Alper, I believe you're in sunny, steamy, hot Dubai today, right? 43 degrees, feels like 50.
Yes, exactly. And I really don't want to see any more pictures of people in Mykonos, my friends just partying in EG in some place. Hopefully I'll join them soon. There's always that. When you're an entrepreneur, the good thing is, the bad thing is you have to work through the summer. The good thing is you can give yourself vacation next week.
Sorry, Alper, I just don't know which entrepreneurs are in Mykonos right now. You're probably talking about all your VC buddies.
There's quite a bit of truth to that. Actually, there's quite a bit of truth to that. It's amazing how, like, we have to spend no money. We're very frugal and go cash flow positive, but we get those messages from very fancy places around the world. Anyway, that's probably another conversation. I love my VC friends. I love my VC wife. Right? So
we all do, brother. Don't worry. We all do.
Yeah.
I mean, are you a VC if you haven't spent the whole summer in Ibiza or Mykonos? I mean,
with some shoe brand that I don't know about, so that you're wearing some funky glasses that I don't know about. So yeah. Truth be told, there's probably more true about our US VC friends than our local VC friends here.
There are a lot of I'm recording this from Prague today, and it is amazing how many, not Ibiza or Mykonos, but it is amazing how many Americans there are in high-end places in Europe this summer. I don't know if it was always the case, but the US is over in force in big numbers. But we're not here to talk about European holidays. We're going to talk about Dubai and building the UAE as a center for VC, entrepreneurship, and all other good things. And Alper, tell us a little bit. I mean, obviously, Gaurav knows you very well, but for the folks listening to this who don't know you, tell us a little bit about yourself. Where did you grow up? How long have you spent in Dubai? Why Dubai?
So I guess quickly in a few chapters. The first chapter, I was born in Turkey, so I'm Turkish, and until I was 14 years old, lived there. I was a ultra geek in high school, so I got a scholarship and went to US, and really liked it. Imagine this 14-year-old kid. I was about this tall, but the same size head, right? Ultra nerd. And I landed in Atlanta, Georgia, and suddenly there are no parents, and there's this amazing opportunities of hobbies and things to learn and things to do. So I really loved the US and that experience, and stayed there for about 20 years. I became a citizen. I studied engineering and got my master's in electrical engineering as well. I'm a microwave engineer by training. So I designed really awesome gadgets to send to space or looking down from space to Earth for NASA, for the defense contractors, etc. In the first chapter of my career. Then I realized that the people in the front office were making a lot of decisions that were affecting me, and I wasn't getting all the glory nor the money, right? So I got an MBA, and I still didn't know what I wanted to do next. So I went into consulting. I joined McKinsey, and I first joined in New York City, but quickly transferred to Europe. And from Europe, I was based in Helsinki, and it was very cold and dark for my Mediterranean soul. So the brain was American, but the soul was still Mediterranean. And the Helsinki winters were just too cold and dark. And I started taking projects here in the Middle East. And this was like 2008, 2009.
Yeah.
And I helped start Zain in Saudi. It's public information now. It's so much time has passed. And that was quite eye-opening, right? I was a telco expert, and because of my microwave engineering background, and here was this G20 country, the only G20 country that didn't have a third operator, and I was at the, that launch state of that operator. It was a lot of fun. I really loved the Middle East. There's an adventure in me, I think. And then, yeah, just moved here to Dubai with the family, but, kept on traveling back and forth, Saudi and the rest of the region, and quit consulting, start my own consultancy. And over time, as we made money, we started making angel investments here and there, and until we ran out of things to invest in. This is like 2010, 2011, 2012. There's, I think, only our friends at MEVP and Wanda, that was it. And so when we ran out of things to invest in, we started building things. We had no idea what we were doing. Looking back, we thought we were smart because I was an ex-McKinsey guy and I was an engineer. I can build anything. But this was, early teens in Saudi, and built Foodsati.com, which was a Groupon clone back in the high-flying days of Groupon. Built Akleti, which became Food Enclave, which became Talabat in Saudi. I was the founder of that. We exited that in less than 2 years to Delivery Hero. Built Mondo Taxi, which was a Korean competitor in Saudi, only in taxis. We pivoted that to Africa and exited that in Africa, and we built something that we, at the time, was called Commit Device Protection, a cell phone insurance business. A new rendition of that is Zention, which is a global venture portfolio company that I built with Ritesh, my partner, right? And this kind of tries and connects us to the last chapter. Once I had these exits and I was thinking what to do next, Ritesh and I had built this business and really got along and became brothers. That happens when you live in the same house for 9 months in Saudi together, right? And we were looking at what to do next, and we both had the thesis that somehow startups should be easier in this region, not only in this region, but definitely also in this region. And there should be a better way of building them. And we fashioned together a holding company that would provide services from the center and, would fundraise and invest from its balance sheet, and then provide technology, marketing, admin, HR, etc., from the center to increase the chance of success. And that's how Enhance came to life. We're a venture studio. I guess we're the pioneer. I'd be proud to say that more if it wasn't so painful a journey in the beginning, right? But yeah, we're the pioneer venture studio here. We didn't know we were a venture studio when we first started. We called ourselves a digital holding company, and we said, hey, if Math can do it, if Alper Celen or Olayan can do it in the offline world, can we not do the same model, and increase chance of success for the next venture by doing things, centrally and injecting like this know-how and expertise and the network that we had. And then over time, we realized that, okay, Enhance is not alone. Of course, like we had heard about Rocket Internet, etc., and we started looking around, and there's the startup studio thing, or venture studio thing, or startup factory thing, or venture builder thing that people are using interchangeably around the world. And yeah, we started meeting some of them, and yeah, the rest is history. Then we realized, okay, we're the thing, and we start getting better at that. Today, Enhance is, that venture studio. We have 8 portfolio companies now. We're just getting started, 7 years in, and we build ventures for the future of finance and commerce, and we do it from scratch, methodically, working with very capable, awesome founders, and do it through these stages of ideation, validation, creation, and growth, after which we would spin the ventures off and raise money externally. That's the short version of it. And yes, I grew gray over time as I was doing that. It's, looking back, I probably should have quit McKinsey 5 years later. We always thought that where we are, in the ecosystem today would come like 5 years before, right? We were too optimistic. But again, I think, there are, so I don't blame myself too much for that.
So Alper, Enhance Ventures, this venture studio, originally a digital holding company, it's been around, you said 7 years now? So
yeah, we're approaching 7 years.
So it's about, you guys kicked off in 2016.
Yes.
And when you started, there was nothing similar in the landscape in the UAE or in the region, or what was it Had you seen similar models elsewhere? I mean, and you mentioned some of the traditional large corporate behemoths who were doing this, but in the digital or tech world, had you seen similar models you'd seen either in the US or elsewhere? Go, I like that. I'm going to replicate this in Dubai.
There was not much here for sure. Rocket Internet, you know, of course, everybody knew Rocket Internet. They were even more famous than they are now. And their success story, you know, they're famous and infamous in some ways, but their success story, nevertheless. We knew of Idea Lab, right? And you know, but we didn't know much more. And through this journey, right, it was amazing. Like we started saying, oh, like when we, you know, talk to people, they said, oh, you should talk to this company, this studio, or this, you know, holding company in US or in Paris, etc. And over time, we realized, okay, we are a studio. Then our Google searches became a bit more refined, right? And we kept on counting more and more. It was 20, 50, 100. I remember reading this article. There may be 100 studios around the world. And then on a crazy, I think it was like a Saturday, 2 a.m., I said, we should start building a database. Nobody's counting. Let's start counting. And we started counting. And and as we start counting, the word got out that we're counting and there's a database. And we built a public version of it as the startupstudiomap.com, right, which is on our website. And now everyone that launches a startup studio comes to us and wants them to be listed on the map, and we keeping the count, and we're up to 877, right? And we were so hungry for knowledge, right? I remember we were trying to raise money from, I guess I can say it. We went to STV to raise money, and my good friend Walid Al-Ballah, who was a partner there at the time, he listened very, you know, as he is, you know, with full attention, and he said, I really like this idea, but can you educate me on how this is done in developed ecosystems? I had never heard such a statement from a VC, not here, not anywhere, right? That it's such a humble VC saying to us, can you educate me? So we took it to heart, and we doubled down on the research, and we wrote this white paper called Innovating Innovation. And it was to impress STV. And at the end, they couldn't invest in us because of, you know, LP agreement reasons. You know, they can't invest in holding companies, so essentially end up having 2 layers of management fee. But the white paper, we just put it on our website, and it caught like wildfire. Now, like, people just kept on saying, oh, this is great. Now I know what we're building. I didn't know we were a studio. And we were just this humble, we had a couple of ventures at the time, you know, this is 3-4 years ago. And everybody started calling us. And I suddenly found myself in this imposter syndrome. Like, you know, I was just learning. I was a student. I wasn't an expert of the studio model. But people were calling and asking me just because we wrote this white paper. And that put us in touch with, you know, GSSN, the Global Startup Studio Network, which is a Denver-based organization for studios. We flew over to Denver. We had a meeting of minds. I joined their board. And then it was a flood of information, like meeting so many studios, hundreds of them, right? And our model is 10 times better as a result. You know, whether they know it or not, our investors have greatly benefited from that, you know, ecosystem involvement. And here we are today. But no, in the early days, you know, if I knew the model was this complex and was in some ways so difficult, I probably wouldn't have ventured in it, right? So it's good that I didn't know as much, and I was this, you know, bright-eyed entrepreneur, younger, saying that, yeah, we can build ventures in parallel.
If you had to describe a venture builder, like a TLDR, to someone who knows nothing about it, how would you do that in 1 or 2 sentences?
I have that because this we had to come up with, you know, as part of that Global Startup Studio Network, this association of studios of about 100 of us, right? We said, what is a studio? And a studio is what we call an institutional co-founder that wears two hats, that invests and builds ventures using a playbook and a central organization for repeated success, right? And venture building. So, and it's very different. You know, people always immediately say, "Oh, you're like an accelerator." No, we're not. Or people say, "Oh, you're like an incubator." No, we're not. We're like a founder, right? It just happens to be that we're whatever, like 55 people, right? But act as one founder coming into this venture. And I just happen to have this technical, marketing, etc. capability, and all this network of investors, stakeholders, you know, different, you know, banks and insurance companies and utilities, etc., that you may want to do, you know, partnerships with. But we act as, really as a founder. You know, we end up naming a venture together with a founder. I may decide on the color of a logo, right? A VC doesn't do that. An accelerator doesn't do that. An incubator doesn't do that. We get deep involved in the tech stack and those key decisions that may result in speed versus, you know, tech debt, etc. Right? And we do initial marketing. We'll launch you know, day one in multiple countries because we have trade licenses across, you know, the region, etc. So that, I think, is the summary. But it's the shortest two word is the institutional co-founder. That's a studio. Yeah, it's a very different breed of venture organization, and spans across the widest, right? An accelerator will accelerate something that actually exists, right? Has revenues to accelerate. An incubator will do just that incubation part. A growth VC will invest only in Series A, B, C, etc. Right? We come in and from nothing to Series A, spend that, you know, widest gap in for the first, you know, depending on where you are, 9 to 18 months.
No, I think I asked for a TLDR of 2 sentences and you gave me a brilliant one of 2 words. Institutional co-founder. It kind of nailed
it was 2 pages. It was 2 pages first, and then yes, two words as well. Yes.
No, it's hard to get down to 2 words. Whenever someone can summarize their idea into 2 words, it means they've done a lot of thinking. I mean, a lot of work. But I don't want to blow hot air up your whatever. So let me get Gaurav into the conversation to probe.
Hey, how's it going, Alper? Thanks for joining us.
Hey, Gaurav.
Hey, I'm good. I mean, you know, we've been talking about the origin story, right, of where you've been and where you've got to now. And I think that's super helpful in understanding a number of things based on the questions I'm going to ask you next, which is, I think what you've been doing is an evolution to cut your teeth to be able to actually have the credentials to tell people you can do what you can do, right? But I want to get into a couple of those learning stories because I think it's important for you to share that with people, right? To get that exposure about your background a little bit more. Some of the companies you started and been a strong part of has been Joy, for example, right? JOI. I think that's been the cornerstone, right? And then if my understanding is correct, you went into Medicus, that went into a different naming, or it's still Medicus, and then that was one of the companies that started as part of your venture builder platform, right?
Medicus is not. Medicus is, you know, Ritesh was, I think, the first investor in Medicus, but Medicus has not been through Enhance. But Joy definitely is the first venture. Medicus is a sister venture, I would say, just because, you know, Ritesh is very early involvement, but it wasn't an Enhance venture.
So that was just an investment from the platform, I suppose some that went through the platform or the operational piece, assisting that company to grow. And then how many have you got today now?
So the portfolio, so we have, you know, all 8 companies. So we have, Joy was the original baby, right? Because when we first started, you know, we can maybe also talk about pivots, right? We were very focused and we said, we're going to build vertical marketplaces, B2C, right? That's the studio, right? Because that's the experience that we had having built what is now Talabat in Saudi, having built Mondo, which was another, you know, marketplace, Fursati was a marketplace, etc. Right? So we built that, and a bit, you know, different than our current ventures. Ritesh and I, because we were just raising money and building the first venture along with the studio, we were the founders of Joy as well for the early years, right? Now someone much smarter than me. Rami Kahali, this awesome gentleman, runs that as a CEO and partner. And then over time, we built Clever, which is a cashback app, which is live in UAE, Saudi, and Turkey. We have Lutera, which is a Thrive market model from the US, where you can subscribe and get a great discount on organic food. We have Right Farm, which we built and invested in along with ADQ. It's a B2B fresh produce and foodstuff marketplace. We have a little twist. We have partnered with India's largest crypto exchange, DMS, and we have a joint venture with them. That's a business that we didn't want to build from scratch because of the complexity of the technology, but not only that, because of also liquidity issues, right? And difficulty in getting regulatory permission. So we have that joint venture, and which is live already in Turkey, operating and generating revenues, growing nicely, and should be soon live here in the region as well. There's an announcement coming, which I shouldn't mention here, but there's been some big news coming on that front. And then we have Prop AI. Prop AI is our latest venture, built with two amazing founders, Ranim Skaf and Christian Kunz. It's our most ambitious venture probably to date, and it may be our most ambitious venture ever, right? It's because it's trying to disrupt the largest asset class in the world, residential real estate, right? It was a $250 trillion asset class. And we're trying to just use big data, AI, and advanced analytics to help people first better assess what market they should invest in real estate, and then in that market, in what area in that market, and what exact property to invest in that in that market. So that's the portfolio. There are two things that are in validation stage that I shouldn't name yet because they haven't passed validation. Again, we're building with amazing founders, and that's the kind of the joy of it, right? Yeah, all falls into this future of finance and commerce world. But the kinds of things that we're looking at are, the things that we're interested in are this real estate investment and funding of that investment, or that is a very interesting, and there's a lot of friction there in this region. Right, and it's an area of great interest and a big asset class, right? So things like Prop AI, but we're also looking at, for example, I'm interested in like rent-to-own models, right, and how that can be applied here in the region. We're also interested in like personal or SME lending, and trying to figure out ways in which we can do this with a banking partner or without a banking partner, and with near zero risk, right? There are interesting models that we're looking at there, for example. And we're also looking at, still looking at, of course, nifty, interesting ways of marketplaces and e-commerce. One ideation that we're running right now is around like fashion, sustainable, conscious fashion, and lifestyle consumerism, right? We have an amazing founder that we're ideating and validating around that. And then one other area is something that we face all the time. Another area that we're ideating around is startup funding. All of our friends are troubled either from the supply or the demand side, right? There's not a single VC that doesn't see it as a problem. There's not a single founder that doesn't see it as a problem. Surely we can do better, right? Like it should be easier and with less friction than this. So those are the things that we're interested in looking forward.
I think on one side, you're trying to build a community. On the other side, you're building ventures. On the other side, you're fundraising as well for your fund as well as individuals in some certain capacity. So you're doing a number of things simultaneously. I guess that's needed for this ecosystem because, like you said, there's not enough to sort of make that fluidity happen for all these pieces already that exist. So how many people does it take to run so many different initiatives? How big is your team today?
So we're 55 people, so it's not a small organization. You can't run a studio.
That's a lot of people. 55 people.
Yeah, I mean, there's a whole tech team sitting in our tech kitchen in Istanbul, and then we have team members sitting in our Riyadh office. We have team members in we used to have an office in Cairo. We don't have it anymore, but we have a sizable team sitting in Egypt, and a satellite office in Jeddah and satellite office in Amman as well. We're going to be probably next going to Qatar, and but doubling down in Saudi for sure. So that's the beauty, and the model is really favorable if you're coming in with as a brilliant founder and you want to go fast, right? Because all of these resource capabilities are ready-made, and you don't have to recruit them, find them, or judge them, grade them, right? Even when it's like a law firm, like we have a law firm, we've been working with them. You don't have to go search for a new law firm or an accounting firm, in Saudi that understands the cap, etc. We've figured all of those things out. So that's the good side. The bad side is, yes, you have a payroll, right? And you need to feed that payroll. You need to keep building, and yeah, so quite a bit of a studio founder's time goes to fundraising, so that your founders don't have to as much, right? Of course they do, but not as much.
So, looking at what's next for you, how many people do you think reach out to you at the moment today, or what kind of people should reach out to you? People who are listening or watching this right now might be the right people who want to get in touch with you. What are you looking for, and who should contact you?
So we have, so you ask a question and I should answer in 3 sentences, but look, really, there are 2 key stakeholders, right, for a studio. There's a broader community, but I think the rest of the community we can touch on a bit later. 2 key stakeholders, right? One is founders, right? Incredible founding talents. We do not believe in the mythology that there are superheroes out there, right? That's more venture capital, that they think that you have to have a Superman to go build you a unicorn, 2 things that don't exist. We believe that we need to find Tony Starks of the world, right, and build Iron Man, build the exoskeleton. Still, he's exceptionally brilliant, very capable person, right? But that first stakeholder class is the amazing founders, and now it's a real test to weed out real founders from what I call entrepreneur tourists. Because the one thing that a studio does is the studio comes and says, "Hey, I have all the capability and I have money. Let's build something." Everybody that dreams about becoming an entrepreneur but doesn't understand how difficult it is knocks on your door, right? And it is difficult to weed out who are the true passionate people who have the risk appetite, etc. Right? But those people that really mean business, they're willing to throw in the towel in their corporate job, or have been founders in the past and didn't succeed for XYZ reason, or have been in the forefront of like building successful ventures but not as founders, they can reach out to us, right? And we have a form, they can go to our website. There's what we call the Entrepreneur in Business program. They can apply there, and we'll come back to them within days, right? The other stakeholders, of course, investors, right? Investors in our studio, investors in our studio fund, the $30 million fund that we're raising, and investors into our portfolio company, right? They are dear to us. I love my VC friends. VC friends and studio friends, track talk and like have this good banter, but in reality, all we're trying to do is build more quality deal flow for them to come and invest, in Series A, right? And without them, I don't have the funds to, take something to IPO, right? So there is no ecosystem without them. So that's the other stakeholder that we want investors to better understand what we do and why we do what we do, and what are the nuances to it. Because there are also, as we made the studio model more popular globally and here, there's also a lot of pseudo studios that popped up, or people who shouldn't be building studios end up building studios. If you're 30 years old and you never built something before, you can write code, you probably shouldn't start a studio yet, right? Because the digital product is only a part of what we do, right? You should be an established founder that can now support founders in parallel. those are the two that I would say. There's the whole community play, and other stakeholders, obviously, but those are the two that we hope reaches out to us and want to know more about what we do.
I'm a big believer in experienced operators assisting companies get to different stages of maturity, prior to exit, right? There's fundamental growth, there's fundamental profitability, and then there's fundamental sustainability of business growth and profitability before you can truly exit and have a stable exit. Generically, it seems to be the thesis, which I would believe is how you build the exits for this space. But operators' involvement is a contested argument, I guess, between studios and VCs, where VCs operate with capital and perhaps network, but studios would get more involved. I remember reading a TechCrunch article saying operators should stay away from working in startup communities because VCs have got this and they should step away. So it's interesting to see how that conversation's evolving. But that brings me to my next question, which is, either which way, in your visibility, being somebody that's worked in the VC space effectively, doing an operator-led model for studio venture initiatives to create companies, where are the exits you think going to happen? Do you think the build basis for exits in this region are growth-led companies, or has everything changed given the recent spectrum to profit-based initiatives? So the reason I'm asking that is, do you think the operator-led model is going to help companies achieve profitability to growth for exit, or that doesn't matter anymore and the VCs will also sort of continue to see exits based on growth-led models? Because I'm not seeing so many exits. I'm seeing M&A happen in this region, but I'm not seeing so many exits. So it's interesting for someone that's sitting on both sides of the conversation to give some insight to that.
So I think I'm hoping, we go back to somewhat of a norm that we're used to in the coming quarters and years. But in the short term, yes, I think our involvement in our ventures, even ones that have spun off from the studio, have led to better unit economics and either profitability or an approach to profitability. I think that everybody in this current reality has to acknowledge and should be working towards, right? Now, that doesn't mean that those businesses end up being what we call lifestyle businesses and will have small exits. We're hoping that either the economics continue to improve so much so that they are able to mostly self-fuel growth, or we get back to a norm that wasn't the crazy free money of 2 years ago, but not today's no money either, where venture capital is able to fuel that growth to lead to an exit. Our reality about where those exits are in this geography is not different than any other venture organization or our venture capital friends. Because Joy today, having spun off and being a Series B company, yes, I sit on the board and I talk to Rami as much as he wants to talk to me, but he runs the business and it's venture funded, right? We have multiple venture capital funds in there, and they're incentivized just like me to keep the business growing and reaching 20x current numbers and having an exit. The exits probably will be when they come. I think there's going to be a mix. I think the mix that we've seen, right? I think there's going to be cream type exits where American, European, Asian, larger players will come and acquire us here, right? And there will be trade sales to large retail conglomerates, especially for the kinds of some of the businesses that we've built, right? Joy is quite attractive to a large retail conglomerate, right? So it keeps on scaling. I think that can be a play. Or we're going to see, with increased pressure from, and push from the local governments and their local public markets, more IPOs, regional IPOs happening, such as what Shahaz has done, right, in Saudi. And so we can see, our ventures, growing to such a stage where they can have IPOs regionally, if not, let's say, London. But it's the same challenge that, we're facing with everybody else. But one has to believe that with the fundamentals of the economies in which we operate, those exits have to be there. We cannot keep delivering this amount of value, millions of gifts delivered, right? Or selling, hundreds of houses a month, hopefully with prop AI in the near future. And that doesn't, move the needle and somebody doesn't notice. So,
I think,
again, hopefully in 5 years, I don't look back and say, oh, it took 5 years to get there. But, I think there's enough dry powder. That money, the dry powder has to be spent. I think in Q4, Q1, we'll start seeing, some more movements in venture capital. That's how I see it. Maybe that's me, the optimist. And we seem to have the strong macroeconomic fundamentals in this region, being GCC, where we will fare better than our, average brothers and sisters out there in the rest of the world, just because of the strength of the economies here.
I think there's a lot of maturity that needs to happen to this market that will also enable exits to happen more frequently. I think you're still at the early stages for it to happen. I think it will happen at some point. I agree with you that perhaps it'll happen over a longer extended period of time that most people are comfortable to wait for those exits. But having said that, as everyone who does know me knows, I've got enough skin in the game to know, I'm very heavily invested in all these ecosystems in the startup world, generally speaking. But when I look at this region in particular, having exited a business here, I can't help but keep going back to a fundamental where my personal belief is I still think investors have the wrong fundamental expectation on returns in this ecosystem. I think returning exits from businesses in 5 to 7 years is too soon. I think it's 7 to 12 years, depending on certain businesses and sectors. Absolutely. And I don't think investors have that fundamental. I don't think that's being communicated. I don't think they have the patience for that. I think it's going to have, a restructuring of the ecosystem to some extent. I don't know when it's going to happen. Maybe it's already happening at this point in time. But what's your take on that, especially given you touched on something very significant, which is a huge element of this, not just from the investor side, but from entrepreneur tourism, right? Having the stamina to do this is something that's really fundamental. I mean, we talk about people, and we talk about talent, and we talk about people who have experience, but humans are humans, man. I mean, when you look at it, right, you really have to have the stamina to be able to deal with blow after blow, everything else, or ups and downs of global economy, not just, and it takes a real mindset of somebody to say, I'll forego a salary for a bit, or, I'll be able to rally around my troops day after day and build company morale, not just because you're some whiz kid or some expert in AI, who gives a damn, right? Because it's again, I'm talking about this human element. From your perspective, do you think I'm wrong, or do you think this 5 to 7 year exit complete, is broken, or do you think it's going to be the same 7 to 12 years before we start seeing money returns in this ecosystem? Because
I think it's absolutely 8 to 12 years. I think 5 to 7 is a dream, and all the stars have to line up, and I think you have to get lucky, right? I think that is the case in Silicon. That's the case in Silicon Valley, right? And
I don't even
unfortunately,
want to talk about Silicon Valley. I don't even want to compare us to Silicon Valley. We're our own valley. We should just talk about what's happening.
Absolutely, that's even the case in Silicon Valley, right? So, here where there's still such amazing scarcity of capital, people think that there's a lot of capital here. There is not, right? Saudi broke $1 billion last year, and that is $30 per capita, right? Israel is $1,000 per capita, right? VC investment, right? You look at US is like, I don't know, 400 or something like that. So we have all these issues still in the ecosystem for sure. Be it from government support, and how long does it take for me to launch one company here and launch the same company in Saudi and in Egypt, etc. How long does that take? How many rounds does that take? I just talked about funding, which is the second parameter. Then there's still some culture. Why don't we have, so many locals in, founder roles, right? Because failure is not as much an option, as it is for me, or, if you're Emirati. right? That's an issue. Access to talent, right? Why do every startup, have their tech kitchen elsewhere, right? It's a problem because it's too expensive for me to have my 20 people tech team here, right? And access to markets. Why do I have to deal with all these different currencies and borders and different customs and regulations? So the issues are there. Thus, it is very difficult to be a founder, right? You're actually touching back, going around and touching on our whole thesis. And the exits will not come in 5 years. No way. No way, right? They'll come in 10 if you're good, right? And in that process, you end up having this army of incredible, courageous people at some point or another depressed, right? Demoralized, showing a bright face and smiling, right? Go around it. You're part of this ecosystem, right? If you really take a true toll of your close friends in the founder, class, right? Probably half are at least down, if not depressed, right? And thus the studio model, right? This is our thesis, because it is too lonely to try to do this by yourself, because you cannot talk about it to your spouse. You definitely cannot talk about it to your VC investor, right? They think they hear it first. They don't hear it first, right? You can't talk about it to your team because they're going to quit and leave, right? Here comes this, this guy that is willing to grade further for you, right? And provide therapy, receive therapy himself because he has his own startup challenges, right? And, supplement you when you're down, right? Okay, you don't know, we thought you knew product. Okay, you don't know product as well. Okay, we have product people, right? Or marketing, or, hey, you know what? You just broke up with your girlfriend or boyfriend, whatever it is, right? And you're just not 100% for the next month. We'll come in and support you. So the dream is yes, I hope that we can compress that 10 to 12 year period with a studio and do time travel into 7 or 8. I hope so, right? The jury is out. We haven't had an exit yet. We're at 7 years in operation, but our vintage is still early, right? Most of our vintage is just a few years old, right? But even if I don't do that, I hope the journey is better with us than if you were in the wild, right?
Let's talk. Mental health is a completely separate topic altogether. There's a brilliant founder, Abrar from My Hakini, that's launched a service that's digital therapy and online for people that would like to have access to someone to just talk to from a neutral position. It's not a medical, facility of any such or any requirement. It's just therapy, which is great. So mental health, it seems like, is a big aspect of what you are looking at in terms of ensuring the quality of your founders or operators have access to within that template of the venture studio model, which is great to hear. I'm very happy to hear that. Let's zoom out into the future a little bit, right? You've just started the journey. You've also been part of my understanding, an initiative to help with the ecosystem here and bringing other venture studios here and having conversations and doing it. So you're not
Sure.
looking to sort of hog the space for yourself. You're trying to educate people a bit more. You're trying to invite more challengers, competitors, sort of till the soil a little bit more, just to get things going and get the movement started. Where do you think the biggest venture studio space is going to be from a perspective of talent and exits? Do you think it's going to be there's going to be a hub, but it's going to be spread across the region? So it's typical the Kingdom of Saudi Arabia, UAE, Egypt, just because of sheer size and population and spread and reach, and then to other ecosystems around like Qatar, Bahrain, Lebanon, etc. Or do you think it's going to be clear winners coming out of certain ecosystems which are more conducive from a cost perspective, where people can set up at cost better in Turkey or in Egypt for unit economics, to then just set up a representative office in these more higher, growth hubs such as KSA and UAE? Where do you think the next 5 years or the next beacons are going to be of this development? Where do you think your big office is going to develop?
So I think, just like for every scale up in this region, our future, as I look, we're already in 9 countries across the region, right?
Oh, wow.
Our ventures are operating and generating revenues in 9 countries, and we have offices in 5. As I fast forward, I think that's just going to be the even more the reality. I think we're going to be seen as a Saudi/UAE studio, right? And I think that's just what the market demands. That's where the customers are, right? And that's where there's a balance between what's offered here and what's offered there, and it just makes sense to kind of combine this region into one from these couple offices. Maybe you can add Cairo to it. We added Turkey to it for technical talent, right? But I think was Karima UAE startup? I think when it was sold, probably had bigger revenues than Saudi, right? So I think that's going to be our reality. We're going to be much heavier in Saudi, not in 5 years, next year, right? We built Saudi first businesses. We have to. That's where the customers are. It's a G20 market, and we want two founders to every venture, and we want one of them to be Saudi going forward, at least one, if not 2. So, and I think that's kind of matches every scale up, and if I see our studio as a scale up, that's going to be our reality as well. And you mentioned, I think, what we did with the IFC, and it's public information. We helped the IFC launch the Launchpad, which has attracted many studios to come and set up shop here, right? And there, we did it for 2 reasons. One is, yes, it's giving back to the community, and it's also business. We did this as a business, but more importantly, for longer term success of Enhance, it puts the studio model on the map. The IFC is an amazing global business destination, and for them to come and say one of our main pillars of our strategy is to be, global hub for studios, that builds so much credibility to what we do day to day, right? And competition, like, I hope there are 50 studios operating here in Saudi. Like, there's infinite number of things to build, right? It's not like if you're a VC, you may have limited number of good deals a year, and you're competing against your fellow VC who's also a friend. Once in a while you share deals. There's infinite number of things to build and infinite number of talents. There's 50 studios here, each building 4 things a year in average, like 200 ventures, and each had 1.5 founders each. That's 300 founders. I can find the 300 first, right? It's not competition. It's just would add so much more credibility to what we do. We would get even more of those 2 stakeholders, the founders and the funding. That's why we did that, and really kudos to DIFC for taking what was a casual conversation and suggesting, saying, hey, you know what, this sounds very interesting. Why don't we be a global first, and as an organization like us, and house these studios, because there's no other venue for them. But we have a heat map. As the nerd that I am, we plotted all the 877 studios on a map, right? As a heat map. There are 8 hotspots, right? That is Silicon Valley, LA, New York, London, Paris, Amsterdam, Berlin, and Singapore, right? The 9th hotspot should be here somewhere, not here in Dubai, here, somewhere in the Middle East. Unfortunately, we're going to probably distribute, the HQs of the studios that are probably setting up shop here to Dubai and Riyadh, maybe some in Abu Dhabi as well, right? Cairo, because of the massive, for certain models and certain studio types, it may be interesting for the 100 million population. But when you look at that map, you're probably not going to see, we may have 50 studios in the next couple of years here, but it's not going to be the amazing hotspot of 50 studios in just Paris, right? So is that a downfall for the region, or is that a strength? I think the jury's out. It'd be nice if we had one currency, right, across GCC. It'd be nice if we could, travel freely, like EU, etc.
You're preaching to the choir, my friend. You're preaching to the choir. I think there's a movement that's happening. I think people are talking, conversations are happening, but time is something we'll have to wait with and until they get that eventuality.
I'm definitely, my business plan doesn't have that, right? If it happens, amazing bonus. And the other thing is, like, we actually don't mind friction somewhat, because like studios do better in tougher environments, because I end up having a more secret weapons or like a secret sauce, right? An unfair advantage. If I'm in these 9 countries and I take you to those 9 countries faster than you would otherwise go by yourself, it becomes a reason to prefer me as a studio. So I don't mind it so much. It would definitely expedite, our ventures, and we'd find other secret sauces or secret weapons. But emerging markets actually do have a, comparative higher advantage than, let's say, more advanced markets.
I know I'm a cynic, but I like to look at things from a positive view once in a while. And, having said that, I believe that the fragmentation of the ecosystem is actually a natural moat to allow our startup ecosystem to evolve and actually get acquired by foreign corporate entities, as opposed to foreign corporate entities coming up here and destroying startups. So the way I actually look at it is I wonder how many startups or this ecosystem would actually exist, if at all, if we didn't have this natural fragmentation mode, which encourages people not to invest the time to do it, because sure enough, some of these monsters have God knows how much money. They just don't have the time. So for them, I think it's a natural moat, actually. So it could be a very double-edged sword that when you have a unified currency, I don't think we'd be able to start ideas as quickly as people be able to come and monopolize the hell out of certain aspects of our ecosystem. So that's, double-edged sword.
I think there's absolute truth to what you're saying. If you think of like let's take the 3 big exits, right? Like Souk exit was definitely a case like that. Kareem exit was definitely a case like that. Food and Click, Yemek Sepeti, Talabat exit to Delivery Hero.
And don't forget, how many people, how many major big name startups have come here and left? We know those. There's some extremely big startups that have come here, made noise, arrived, and quietly left. Very quietly left.
Yes.
But on that note, I'm going to hand back to Ronit, because we're running out of time. We could be here all day talking. So thanks again, Alper, for your time. And with that, Ronit, back to you, brother.
Our pleasure.
Thank you so much for joining us, Alper. I think there's nothing more to say than let's keep the conversation going and look forward to seeing all these great businesses you guys are building.
Hey, look forward to it, and look forward to your support as well. What you're doing is amazing. Really appreciate you both, helping build this community to what it is, today. And I'm sure it's going to be even amazing with your support in the coming days.
And if we ever need an institutional co-founder, we know where to go.
Yes, please. Give us ideas, give us people, give us money, right? The rest is ours. All the best. Thank you very much.
Thank you so much.
Bye-bye.
Thank you.